everybody to Business Talks. Today I have Carsten Hjelde. He's a sustainable investor and he runs his company ACINI CAPITAL, which had a really nice profit stream in 2017 of 100 million Norwegian crowns. So that's really impressive. Welcome so much, Carsten, for coming today.
Thank you, Victor. Thank you for having me.
I'm gonna just jump right into the topic today. What is sustainable investing, Carsten?
Well, sustainable investment is like adding an extra level to traditional investments.
Okay.
So what we try to do is to see what are the guidelines for the future, and we use the United Nations Sustainable Development Goals.
Okay.
And we try to look into businesses who are complying and fulfilling some of these needs for the future.
Okay, so the UN goals, are those like 25 different? That's a lot of metrics to take into account.
Well, it's a lot of metrics, but I mean, every kind of business is about satisfying people's needs or customer needs.
Yeah.
When you're analyzing a business, you need to see, is there a demand for this solution in the future? And we know that the whole world has agreed to a set of metrics, being the Sustainable Development Goals with then no poverty, renewable energy, education for everybody, etc. And if businesses are having a business solution to these needs, then we know there's a demand for the business in the future.
Okay, well, so impact investing, sustainable investing, ESG, environmental, social, and governmental. What are these different forms? What's the difference?
There's a very set of difference. So you have corporate social responsibility. This means, in fact, that a company is taking some normally add-on to the traditional business. So if you have a shipyard in a country, middle-income country, and you might choose to sponsor a school for the children of the employees, or you might to have a special traceability of the raw materials coming locally, so they are of securing labor's rights, that would be like a corporate social responsibility.
Right.
Then you have the ESG, which is an environmental, social, and governance metrics. And that means that the companies are reporting on a wider set of variables, that being greenhouse gas emission, compliance with corruption, etc. But it doesn't mean that a company is doing good. You can have a company doing bad and still complying with the ESGs.
Okay, and so it's just like a paper, like where
they measure it. If you take, for example, Equinor in Norway, they report on climate gas emissions. The climate gas emissions for the company was up 14 million tons CO2 the last year. Okay. So they increase, and this is not like a development we would like to see.
Right, okay.
When you come to impact investment, impact has the core of the business is working towards solving the problem. So a renewable energy company which is solving a problem, that would be an impact company. You can have a wide range coming with gender equality. They can have a better food production, which is lower climate emission. So there's a wide range. So I think if you want to sum it up, impact investment or impact companies are coming to the market with new solutions which are not presently there. And this is what we're looking for.
Okay. So you had a really good return through ACINI CAPITAL in 2017. I want to ask you, how do you conduct your research as a sustainable investor? How do you do that practically?
Well, we have several levels of investments. So if you go to 2017, that was from a long time investment, which was sold that year. And that was an impact company.
Okay.
So I can explain you. The company was in Norway. We produce a lot of salmon. When you slaughter a salmon, the fillet will go to the shop. Our company would buy the head, the backbones, the intestines, and then we had developed a new technology to use these resources in a better way. So we have copied nature in digesting them, and then we split it up to various fractions. So it's a biorefinery for food materials from fish. And we invested there at the startup of the company in 2000 and sold it in 2017. And at the same time, when we started the business, we got paid to receive the raw materials, so the byproducts from fish. The year we sold it, we were paying about 50 million NOK to customers of the slaughterhouses in Norway for their raw materials. So we increased the value for the slaughterhouse, for the salmon industry, and we also built up new markets for products which were not there in the past. So this is like a typical impact investment, solving a problem from the past and taking it on to the future.
Okay. Do you guys have a fund currently, like a portfolio of companies?
We have a portfolio of companies, yes. So we are spread on both on the stock exchange and in smaller companies, yes.
Okay, so is it all in Norway?
No. What is in listed equity is mostly Norway.
Publicly listed
Publicly
companies?
listed Norwegian equity, and this is because we have proximity to this market.
Proximity, what do you mean?
Closeness.
Yeah.
Yeah, so
Okay.
it's easier to follow Norwegian markets. It's also easier to have contact with the companies.
Yeah, so do you guys do that? Do you guys contact
We
them?
do that, yes.
Do you guys visit the management a lot?
Not a lot, but because we're impact investors,
Yeah.
we would like to also see them advance on some impact metrics.
Yeah.
So we contact them, even if we have like 0.1% of the stocks, which is, it is close to insignificant in the
Right.
big picture. But just because we contact them, they would normally respond politely, and that might be an input for them to like accelerate a run, which we think will be profitable in the longer term.
Okay. Do you have any interesting examples of good sustainable investments in your portfolio apart from the what was it called?
Biomega?
Biomega?
Yes, if we take listed stocks in Norway, we have Borregaard is a good example. It's a biorefinery, basically using wood chips.
Okay.
We have Scatec Solar, which is renewable energy, making solar panels and solar installations. Tomra is recycling. So there is a not a wide spectrum, but there is a spectrum in Norway.
Are they
also
giving a good return?
They have so far.
Yeah.
Some of these companies are perhaps a little bit highly priced at the moment.
They are overvalued. Yeah.
But at the same time, the high valuation is also people see an expectations in the future that there will be demand for these solutions. And
When
they
you're
are
talking
good with it.
high valuation, are you talking high PE ratio, high price to book ratio,
Well,
or what are you?
Yes, and sometimes it's also it's high PE.
Yeah.
Is like a standard one, but it's also a little bit historically. If you see what they're coming from, and if you analyze the figures they had like 2 or 3 years ago compared to the one they have today, you would see that the growth in stock price has been increased more than the other underlying values.
Okay,
but this is also a lack of because of expectations.
Absolutely. So investors assume that this company will truly increase. But when you say underlying expectations, or what do you mean then? Are you talking about the gross margin? Are you talking about operating cash flow? What are we looking at here?
Well, we try to zoom out a little bit. I think also if you want to distinguish traditional investors to impact investors, is that impact investors are more long-term. So we are not looking at like a specter of 2 or 3 years.
No.
We would like to sit and hold.
Okay.
We don't want to sell.
Okay.
We just like to see them develop over time. And when we see there is like an overall good progress, maybe the stock price has increased a little bit too much for the last 6 months or something. That doesn't mean we sell.
No.
We're just happy to sit there. Maybe it will go down a little bit. So it's the underlying term or underlying trends in the market we're looking for.
Okay, okay. So it's not. Are you able to give me some like practical examples? If me and my friends want to get better at impact investing and be a sustainable investor, what would you suggest that we look at? What do we look at? Do we look at the cash flow?
I think
What do we look
everybody
at?
can analyze the cash flow. Everybody can go and look on the metrics. But if you do a mental exercise, which can have certain parts, imagine you buy the stock, you put it in a box, and you will close the box for 20 or 30 years and open it again. If you have, will there be a need for this company in the future? So a lot of petroleum companies will not be able to comply with that test, for example.
Okay.
So that's like a segregation test.
Segregation
The other one is this company actively, the way they are making business or the way they make the profit, is that contributing to solving the UN Sustainable Development Goals?
Okay.
So those will be 2 factors looking into this.
Okay. And just to say, you said that you are in some privately listed companies too. So it's a bit like, it reminds me of a bit of the private equity approach. Do you buy up a majority or not a majority, maybe?
We have both majority and minority in smaller companies. So sometimes we are more active and less active.
And you hold it for a couple of years and then sell your shares?
We don't like to sell them.
No, you don't. You don't. You want to.
But not till that will happen.
Yeah.
So if we have like a small percentage in the company and the majority the owner there would like to sell it, of course, then it's being sold, and we're happy with that. So it's not like we're obstructing things.
What would you say are important characteristics in a sustainable investor?
The interesting part is that in Norway, I know very few, perhaps just one other good impact investor.
So there's only two in Norway, you and him.
Well, I know maybe
Guilty.
100 in other countries.
Okay. Yeah.
So what we see is that this is, to a large extent, is family-owned businesses.
Yeah.
The whole perspective of impact goes more with the family business thinking. Some people have been selling up a family business which they've had for a long period of time, and now they're coming into financial market to invest it, and then they want to look more long-term, and they would also like to have that the money is aligned with their values.
Yeah.
And I think, I don't understand people working for a company where they're not aligned with the values of the company.
Yeah.
And the same goes with money. Why would you have stocks in a company if you don't really like the impact they have on society?
By the way, you've told me some really interesting projects about, well, it's kind of like impact investing, but in Kenya and Bangladesh.
That's correct, yes.
So I've worked a little bit with UNICEF and these type of organizations that are really good, but here is something, just like impact investing is like the new way of for-profit investing, this is truly, like, can you tell us a little bit about that?
Yes, so we have two initiatives. One is a for-profit, which is educating programmers in Bangladesh and other countries. And the other one is a non-profit, educating people in vocational training, so get them into hospitality, hairdressing, tailors. Both are working with like short training, 3 months programs. The vocational training has also where they have a work period of 3 months with an employer to actually get experience, and the hope is then to have them remain there. And we offer this at low cost in order for the local people to pay it, and also for them to have the pride in what they're doing. And we don't want to give away money. No. I don't believe in that. I think if you can solve anything either with business or like a non-profit, that's a much better attitude. So we put high metrics on the return of the money there, and the whole concept is that students will repay the money, and we will take the repaid money and we will make a new center.
So you guys create the school, you have the students actually pay for the education, that comes back to you guys, and you create a new school after that. That's really interesting, because not only do you guys break even from that, but you guys also create an incentive for them to actually put in work. I mean, when you
Absolutely,
pay.
yes.
Yeah. So that's the, I just want to wrap it up a little bit. For BI students, for the viewers there, and for other business interested people who are watching this show, who want to maybe specialize in sustainable investing or create a sustainable investment fund, maybe that's something me and my group want to do in the future. How do we do that? The characteristics and the skills needed. What would you say, Carsten?
Go outside the OECD countries.
Okay.
Go to countries where money is in shortage. So like Africa, there's a lot of opportunities there. They lack capital, they lack also knowledge. So that would be, if you want to be adventurous, look for those kind of markets and see how far you can get with very little money.
But I'm trying to say, like, I'm talking that biometric, I want that 100 million return you were talking in 2017. That kind of investing, that kind of...
Well, that was a lot of, I worked for the company for 10 years.
Okay.
There was a lot of investment along the way. Of course, this doesn't come from nothing. No. We also spent a lot of money along the way, and there was a lot of hardship getting there. Endurance was probably one of the key figures there. But
is it applying the UN goals in our portfolio? Is that it? To follow the sustainable investment approach? Is that?
Yeah. I think every investment should be aligned with the UN goals. Okay. I mean, everything you do should be aligned with the UN goals. This is where we would take society. I mean, we would have peace in the world. We would have more equality. And we need to work in that direction.
So just to wrap it up, so when we do our analysis, we should not only check if the fundamentals are good, we should also check if it's aligned with some of the UN goals?
Absolutely, absolutely.